what we also hear is um, the the markets are overheated. Stock markets are overheated. The reality is it is not. It is your tech stocks are overheated. That is the reality. Now, if you look at this is one of the biggest risks that we have today, right? Which I think, in all fairness, I don't read a lot about, and I don't see many publications talk about. The biggest risk to your investments today is the highly volatile and high return dependence on tech stocks, right? So if you look at the S&P 500, uh, the tech stocks and the biggest tech stocks, the Magnificent Seven, are responsible for most of the returns last few years. Take last 10 years, right? From about 2015 has changed, and you will see that there is absolutely no point in investing in the 496 other stocks in the S&P 500. That is how it looks like because this overshadows everything else. And that to me is the biggest risk. So take Nvidia, for example. The drawdown on that stock can be 15%. It can hit your portfolio in one single day. Whatever returns that you got in the last 1 year, it can hit that portfolio in one single day. And uh, that is a big risk because of the fact that from a size perspective, these tech company market caps are significantly higher than the 496 other companies that are on the S&P 500. Take any other um, you know um, index, you will probably find that there are some smaller set of stocks which maybe overshadow everything else, not to this extent. What this really calls for is the S&P 500 a really fair index? That's something to think about. But on top of this, what we could also look at is can we pick a handful of stocks from the S&P 500 and invest in them? Doable. It's doable for anybody. And using the ecoeconomics thesis, we picked a set of stocks from the S&P 500, all of them index stocks, not necessarily uh, the Magnificent Seven, and we delivered 5 to 7% above the S&P 500. Is it doable for you? Doable for me? Doable for anybody?